EV charging, we went through a painful exercise today with programming the charger. We are 1 millimeter away. When Skylar gets back on Thursday, we will have the QR code up and running. The way the system will be designed and is designed to work is scan the QR code, you download the app, you set up your account, there's no charge. Then you can use your app to initiate the charging station, and you can charge for 1 hour every 24 hours. It should not charge during the no parking times that parking lot is designated for, which is, thank you. And we're adding some additional no parking 1 to 4 signs as well. So hopefully by this, I'm going to say Friday, we could actually charge something. I know I've said it before, but I think we're there. I think we're there. Library refresh, we finally got the list from Nolan Tam for the furniture purchase. We're still working through some details. It's been quite a spell since we got our bids for carpet and paint, so we're going to have to do those again because they're outdated. So, and then we'll build a construction plan of delivery of furniture, carpet install, painting. We have some air conditioning work that we need to do during that time as well, and also removal of old furniture and storage of books and all that stuff. So there's a lot of logistics that needs to fall in place for this to go right. So we're finally at the point where we're going to be able to start moving forward. I just need to coordinate with Nolan Tam and the county library on a few other items, and we can keep going. So,
one question.
It's on the charger. So after an hour, does it stop?
Yep.
Does anything come up and say time expired?
Yep.
Okay. All right.
And for most vehicles, as I am not an EV person, my understanding it is a very fast charger, and you should get quite a bit of charge in an hour, if not a full charge, depending on your vehicle.
Level 3. I think it's level 3.
Okay.
Yeah.
What she said. And the last thing, apologize for not letting you know, it kind of happened quicker than I anticipated. If you noticed, or if anybody asks, the Grove Park has a large fence in the middle of it around the spot that should be grass but is kind of compacted dirt. We're in the process of treating the soil, bringing in some top dressing, rototilling, preparing it to bring sod in so that we're doing this correctly. They have overseeded it in the past by just throwing seed on the hard ground. That doesn't help because you have no oxygen, you have no water. It's going to die and not have good solid root growth. So we are amending the soil and doing this the correct way, trimming the trees back so it gets sun, and hopefully this will alleviate our barren spot in the middle of our park, but there is fence around it to keep people off of it. So if asked, that's the work that's in progress. And that's it.
Excellent, thank you. Next item is City Council reports, where you can see on the agenda, but there is one call out I wanted to make regarding sponsorship packages for all of the city-sponsored events. And if you are interested in becoming a sponsor or reading about it, information's on our website. There's a package that kind of shows all the things that are available to you, as well as the events that the city sponsors. So,
And I just want to add too that we're selling all 4 events in the packages, where last year it was just 3. We've held the pricing for this year, and the deadline is March 31st. So if you know anybody who might be interested, come see me or email me, and I'd be happy to contact them.
excellent. All right. Item 7, public hearings. There are none. Item 8 is action items. This is the Audited Annual Comprehensive Financial Report, or the ACFR, for the city. And who is kicking us off today? All right.
I will. Thank you, Mayor. I just wanted to give kind of a brief overview of what the audit is and give some historical information before we have our presentation on our current audit. And this is just general information for the community who may not know what the audit is and why we do this. Under the California Government Code, Section 26909 and related municipal finance laws, cities have their financial statements audited annually by an independent certified public accountant, which is a third party. It's not an internal function of the city. The city of Clayton has retained the services of Siobhan and Associates, and they will be presenting the audit later this evening. Cities collect and manage money from property taxes, sales taxes, utility fees, grants, bonds. The audit verifies money was spent legally, funds were used for their intended purposes, internal controls are working, and no fraud or material misstatements exist. And this is important to comply with federal and state grants, transparency and public trust. Audits are public documents and presented to city councils. That's what we're doing here this evening. They allow residents to see the city's financial position, pension liabilities, long-term debt, and budget performance. The detection of mismanagement or fraud is one of the most important. The independent auditor tests internal controls, procurement processes, segregation of duties, and cash handling. Cities have to follow standards set by the Government Accounting Standards, or GASB. The audit confirms the financial statements comply with those standards. In general terms, the audit determines taxpayer money is used correctly, the city follows the law, the city can borrow money through bonds or through other means. Grants are protected. The public can trust the local government finances. If there are issues found during the audit process, these will be shown as findings, and the city has an opportunity to respond to those findings and also correct those findings. Historically, year ending in 2021, that audit found no instances of outright noncompliance, but there were material weaknesses and deficiencies with continuity of personnel and succession planning in the finance director position, general ledger closing procedures. The city lacked consistent quarterly closing and locking of account records, making reconciliation and auditing difficult. Documentation of complex journal entries. Improvements were recommended for documenting and defining reoccurring and complex journal entries, especially for inter-fund transactions when we're moving money from one to another. Fixed asset accounting, capital expenses were not properly recorded in the fixed asset module, and the module's balances were not reconciled with the general ledger, so they were never made whole. In year 2022, there were 3 material weaknesses found. Again, the continuity of personnel in the finance director position. Fair value estimates. The audit noted material adjusting journal entries related to the value of the city's equity investment in the Stranahan Home subdivision. The fair value of the equity investment had not been properly calculated as of the June 30, 2022 date. Agency funds. The city acts as a custodian for a number of agency funds. Auditing procedures noted that the relationship between the agency funds were not understood, meaning the staff in place did not understand how to account and how to explain for those funds. Auditing procedures also noted that the cash balance for one of these agency funds was negative by $172,000 and was not reconciled. In 2023, there were 4 weaknesses. Again, continuity of personnel with the finance director position. Discovery of a dozen ledger accounts across multiple funds that were not properly closed, resulting in 5 material journal entries. Excuse me. The city acts as a custodian for a number of agency funds. This was mentioned prior. In this specific audit, auditing procedures also noted that cash balance for one of these agency funds was negative by $556,000 and was not reconciled. Document retention. City procedures for journal entries are to have supporting evidence for that journal entry, and it should be attached to the journal entry. Auditing procedures noted that some of the requested entries did not have any supporting evidence or an affidavit to state what the journal entry was for. Year ending 2024 last year, there were no findings. There were recommendations. Update the purchase order process. That has been completed. Inventory on capital assets. That has been completed. We also do that with MPA as part of that process, but carried over to our system as well. Updating policy and procedures, we are in process of doing that currently. And then you will hear tonight from Siobhan and Associates on the 2025 audit.
Can you hear me okay? All right, perfect. I guess red means good. Red means we're live. 1 second. All right, we are ready to move forward. Thank you very much for the introduction and the nice synopsis of an audit. And I will follow that up with the presentation of the June 30, 2025 audit results. We're going to start with a slide that goes over the standards that we follow. So next slide, please. I think I put some animations in there. Yep. All right, so the standards we follow include the generally accepted auditing standards in the United States of America, of course. That comes from the AICPA. We also follow generally accepted governmental auditing standards. That comes from the Governmental Accountability Office. And these two standards, really, there isn't much of a difference between the two. With the governmental auditing standards, what we're really focusing on, more so than regular generally accepted auditing standards, would be the reporting. We also issue an additional report because of that. We have a report where we say we don't issue an opinion on internal controls, right? Doesn't mean we don't test controls, doesn't mean we don't look at them. It means that we just don't opine on them. Now, mind you, there is the ability to do so. That's an additional scope engagement, right? That was added to the standards a few years back, where we can now issue an opinion on internal controls as a part of what's called an integrated audit. Most local governments have not reached the level of wanting to have that scope included in their audits just yet. So with that being said, what you have really that's in addition to what, say, a private company might have is the fraud awareness, the abuse, the internal control reporting, the compliance reporting, and then the extra opinion letter that covers what we do in relation to internal controls and compliance. What's the objective of an audit when we're following these standards? It's to issue an opinion on the financial statements. Now, the financial statements that you're reading in the annual comprehensive financial report include multiple opinion units. There's two sets of financial statements, and there's two different bases of accounting. You have accrual basis and modified accrual. So it's very confusing. The idea back in 2004 was to make it more clear, to make it so that people in the public that are used to reading private company and public company financials would better understand government financials. Did the complete opposite. Because now you're looking at two sets of balance sheets and two sets of income statements. And there's actually three. You have proprietary fund statements as well. Now, the proprietary fund statements are repeated in your government-wide financial statements. Exact same presentation, essentially. So here's the way to look at it. You have the government-wide statement of net position and income statement, long-term approach. Think of it, this is my capital assets, my long-term debt. This is the long-term financial health of the city. The governmental fund, those are your current approach. Not necessarily short-term, but current. Think 1 to 3 years. This is how we look financially and health-wise financially in the next 1 to 3 years. Proprietary funds are the same as your government-wide long-term approach, right? So again, that goes back to what's our objective. We want to express an opinion on these financial statements with these multiple opinion units and the assertions that are included within. What's the responsibilities of the auditor? Well, we issue this opinion with a reasonable assurance that the financial statements are free of material misstatement. That's the ultimate goal. Reasonable assurance, not absolute. We can't possibly provide absolute because we sample. We identify populations, and we select sampling units, and we test where we find the risk to be the most aggressive. So where are the highest risk areas? That's what we test. So that's why we document controls, that's why we test controls, and that's why we perform walkthroughs. It's because we want to perform this risk assessment to help identify the audit plan. Where are we going to attack? What year-end balances do we feel like could be materially misstated? Internal controls, I spoke about that. Risk-based, talked about that. I think I've covered everything except for one thing, independence. Are we independent? As mentioned before, we're a third party, but are we independent? There are multiple self-review threats involved in an audit. So in that audit that we perform, we have to make sure that we mitigate that risk as well. So we are required to have people in our firm or outside of our firm perform independent reviews of our work as well. So not only are we independent, but we actually get independent reviews of the work that we do. Next slide, please. Here's an overview of the process, and we've added a fourth phase to the audit, but really 3 and 4 kind of go together. So phase 1 is the risk assessment and planning process. That's where we document internal controls. That's where we identify material compliance areas. If you're subject to the single audit, which, by the way, you have to spend $1 million in fiscal year 26 in federal awards to be subject to a single audit. June 30, 25, it was $750,000. But if you're subject to a single audit, that's where we identify what the major programs are. And this is where we spend our time documenting the different controls for the significant transaction classes, and then meeting with your department heads and department people and testing cash receipts and disbursements and payroll and things of that nature. Phase 2 is where we actually get into the weeds on the substantive testing and the cash and investments and long-term debt and capital assets and payroll and expenditures and expenses and revenues and on and on and on and on. And again, more compliance. The audit reporting is what we're doing now. The phase includes working with your management team, developing drafts of the report review, making sure they understand what they're reviewing and that they can accept it, because that is really management's responsibility. It's the city council's responsibility too, to take these financial statements and approve them, and it's management's responsibility to accept those financial statements before they even get to you. So now, if there was anything that you didn't like, you have the chance to provide feedback, and we would follow up on that. Next slide, please. What's included in this financial report that we like to call, one more space, an annual comprehensive financial report. So this is above and beyond what governmental accounting standards require. So the report that you have right now can be submitted to the Government Finance Officers Association for an award, a certificate of achievement on financial reporting, and I'm 99.9% sure that they would approve it and you would receive that award. So this is a very high-level presentation for a local government, and a lot of local governments do achieve this award and this level of reporting, but you're fairly small compared to most that do. So governmental accounting standards only require the Section 2, and that's it. Right? So in your report, you have Section 1 and 3. So you have the letter of transmittal, which comes directly from management, and then some basic administrative stuff like the elected officials and an organizational chart. The auditor's opinion is included in the independent auditor's report, which is about 3 pages now. And the management's discussion and analysis is audited information, summarized in multiple tables with comparative data, and then analyzed by management. We do not issue an opinion on that because it is required supplementary information, but it includes, again, audited information. And then, of course, the financial statements and supporting notes. Additional required supplementary information is where you can find the pensions and the OPEB information, also budget to actual information. And then supplementary information includes all your other funds, the non-measured funds that nobody wants to look at, all the detail. And the statistical data, includes a 10-year history of financial information for the city, economic information, demographic information, tax information. So a lot of good information going back 10 years in the statistical data section. Next slide, please. One more. Statement of net position. So this is that government-wide balance sheet. This is where you see those capital assets, long-term capital assets, non-current long-term liabilities, which includes your net pension liabilities and your total OPEB liability, other post-employment benefits. Really the most important thing to take away from this slide is looking at the governmental activities and then looking at the net investment in, well, the net position overall. And you can see the makeup of the net investment in capital assets, your restricted net position, and your unrestricted. So all very healthy at June 30, 2025. You are not in a deficit position. A lot of cities are. A lot of local governments are in a deficit, unrestricted net position. And some even have total deficit net position, right? So I'm very happy to see that your unrestricted net position is not a deficit, and that it's a positive number, right? That's what we want to see there. The pensions are what really drive those unrestricted net positions down. You can go ahead.
Sorry.
No,
I didn't want to get ahead of you.
no, you're perfect timing, actually. Got to keep me moving. Government-wide revenues. So what we're looking at here is really what drives the city. Revenue, right? So current revenue, charges for services, program revenues. And really, if you look at the bottom line for the program revenues, you had a slight uptick of about $261,000. And then general revenues, taxes, $621,000 increase in taxes, and overall those general revenues are up $902,000. So really what we're looking for. A little bit of a downside over there on Endeavor Hall had a decrease in the charges for services. It's a high percentage decrease, but a low dollar amount. Not much activity there. Next slide, please. And again, it's a history lesson, June 30, 25, right? Expenses by function. So what you'll note here, now this is difficult because government-wide presentation includes conversion entries, right? You go from your fund statements, where you're basically pay-as-you-go on a lot of these expenses with some accruals for AP and invoices that come through and whatnot. But most of the conversion to full accrual is what you're seeing now. So this includes those assumptions and adjustments that go into the net pension liabilities for PERS. So those deferrals that you hear about, CPAs talking about, and that you'll see in the statement of net position, deferred outflows and inflows, impact these numbers significantly. Also, the city is, what I would say, and what I've seen is, the city has an idea of reducing administrative costs, because those general government expenses are quite a bit lower than they were in the past. And I think 24 was really an anomaly compared to previous years. So if you go back into the stats sections, you can get a 10-year history and look at that general government expense each year and get a better idea of what year was the outlier, right? So I think that 24 was really the outlier when you think of general government expenses. Next slide, please.
Are you going to accept questions during or after?
Let's wait till the end. That way I can get through all the nonsense. Yep. Summary of changes in fund balance. Overall, what I really want to mention here is that we have a responsibility as an auditor to look at the city's going concern and to determine whether or not there is a lack of going concern. And that lack of going concern, what we do is we evaluate that from the date we issue the report, February 24th, 2026, and a year later, so 12 months later. So we don't look beyond that, right, unless we have a reason to. And in this case, we didn't. So looking at your fund balance, looking at your net position, looking at previous years, looking at next year's budget, we determined that there was not an issue with the city's going concern. Therefore, there was not a lack of going concern. So you can see overall fund balance did go down by $247,000, but that general fund balance, which, by the way, a lot of that was had an emergency reserve fund there, and then a assigned fund balance. So good job of your management team setting assigned fund balance and being responsible for where that money's going to go. Next slide, please. Pensions, favorite topic, 10-year history. And really, if you look at the last 3 years, fiscal year 25 back to fiscal year 23, fairly consistent, which is unheard of, right? The annual required contributions might show a different story if you want to look in the ACFR. Back in the required supplementary information section, there's a section about the annual required contributions. But the pension liability itself has been consistent the last 3 years. 2022 was really an odd year where everything dipped really low. That doesn't make any sense to anybody, but there it is. So if you look at that curve, though, going all the way back from 2016 back up to 25, it's generally an up curve until the last 3 years. Next slide, please. Total OPEB liability, another hot topic. For the city, $456,000 is probably a significant number, City of Clayton. For most local governments, it's not. But what you're looking at here is that it's been fairly consistent, even going back to 2018. You don't have the 10 years history on this yet because the standard requiring us to report that came out a little later than it did for the pensions. So not really a whole lot going on in terms of the OPEB, other than you can see the detail here of where your contributions, the benefit payments, and then the implicit subsidies are. Next slide, please. I think this might be the favorite slide of the day. And then we can ask questions. Audit results. So we did not have any exceptions in the audit opinions. That means we issued an unmodified opinion. I believe you had an unmodified opinion for 5 years in a row, or maybe more. I didn't look back beyond that. So that's good news. So you can have a material weakness and a significant deficiency without a modification. So more good news. We did not issue a material weakness finding as well. We also did not find any significant deficiencies. We work with your management team throughout the audit if we find something. And so that helps kind of resolve these issues as the audit's going on if we do find them. But your team was really good. We had very few audit adjustments here this year. So It's something that was really just a part of the normal process of the audit, not something that I would call an exception. So those material audit adjustments were non-existent. No disagreements with management, no significant passed-on adjustments. So what that means is the concept of materiality, right? So we identify thresholds, and when we identify materiality thresholds, we think about what the prudent person might want, what the prudent person might rely upon, what might be significant to somebody beyond what a dollar amount is, and then we adjust those thresholds. Then we have even smaller thresholds where we go way down. So what we're doing is we might have amounts that we pass on throughout the audit that are just insignificant. But what if those add up to something material? Well, you might have 10 or 12 passed on adjustments that equal one material item, right? One material amount. And so we did not have anything of that nature to report to council. So there you go. That's the end of my presentation. I'd be happy to answer any questions that you might have.
Questions from council? Did you have questions?
Yeah, I have several questions, but I'm going to let somebody else go ahead and I'm getting organized here.
Okay, we'll come back.
Okay. Summary of changes in fund balance, the major funds. Is that a depiction of the budget for the year 24-25?
Not a depiction of the budget. That's a depiction of the actual fund balances as of June 30, 24-25. So you could consider that in terms of budget. You would want to go back and compare budgeted fund balances to that and see if they were consistent or not.
Okay, and the reason why I'm asking is that because of the total expenditures exceeded the total revenues, and I'm not sure if this is the appropriate forum to ask a definition of that or what the situation is.
So it's not a bad time to ask about that, but I think you might be more concerned about 25, 26, 26, 27 budgets. But what I will say to that is there is a schedule in the ACFR, and maybe I can point you to that page.
Yeah.
It's page, I'm going to get that right now, 83. And on page 83, what you'll find is the general fund budget and actual report, statement of revenues, expenditures, and changes in fund balance, but it's budget to actual. So you'll see the original budget, the final budget, and the actual amounts for the fiscal year ended June 30, 24, 25. And so that'll give you a good overview of how you did compared to budget and whether or not there were budget savings or not.
I guess I have a question. Help me with the definition of OPEB.
Other post-employment benefits. So those are those health benefits for your retirees.
Gotcha. Okay. And then finally, you say there were no significant passed-on adjustments. What would be a significant passed-on adjustment?
So if we had something, for example, if bank reconciliations were off by $15,000, $20,000, that would be immaterial.
Okay.
But it might be significant because it's cash, right? You're dealing with cash. So that
But it would be something that occurred in the prior period and that it was brought forth into this particular, the 24-25.
It could be something like that.
Yeah.
It could be something like that. So it's really more.
I'm just curious because, I
Yeah.
mean, obviously nothing came forward,
Right.
so.
Yeah, so keep in mind our period of audit is 24-25,
Yeah.
right? And so in 24-25, the best example I can give you what a significant pass-on adjustment might be would be something that dealt with cash, right? So if we were looking at a bank reconciliation that had variances, or if we found that petty cash box counts were off, but they were immaterial because typically they are for petty cash counts, that's actually an area of significance because someone might have taken that cash, right? So it doesn't matter if it's immaterial now because it could be abuse or fraud. Credit cards, another area, we look at credit card transactions. And so if an employee accidentally pulled out the wrong card for a gas tank, right, well, that's abuse. Whether it was meant to be or not, whether it was an accident or not, that's still abuse. It's not fraud, it's abuse. And so that's something that we would possibly pass on, or not. So it could be a significant pass-on adjustment, or maybe it's something we present at council.
Thank you.
Yep.
Other questions?
I have one quick one, just staying on that same page, Sheldon, on page 83. It looks like we, on the line that says charges for services, we were down $195,627. Do you know what that is attributed to?
Not specifically. I do know that the charges for services in the general fund were lower this year. I don't know if Dennis remembers.
I mean,
what
is that like permitting? Is that Endeavor Hall fee, you know?
Mayor and Councilmember Trupiano, it is things like our rentals for the picnic areas, for the ball fields, a whole variety of things that involve those charges for service. It even includes permit fees. And
Yeah, well, I said permits, but that seems like a lot of money to be down, and that
Agreed.
we're sure that's accurate.
that's accurate.
It's accurate.
May I just ask then on that same point, what are permits, licenses, and fees that are up the top of the page?
I'm sorry, that would include the permits that we have for like land use permits.
Okay.
Down below are other types of permits.
Thank you.
And things. Yep. Sorry.
So again, it looks like in a normal year, we'd be around 268, but we were only at 72. And it just seems, especially because Janessa was doing such a good job, or maybe, now I'm not sure, well, she was here part of that time, you know, managing that. Was there anything specifically that we can?
We could look at it some more and go back
Okay.
and try to identify maybe sources from the prior year that were missing in this 24-25 period, and try to compare some of those, some of the detail within those charges, and
Okay.
try to see if we could identify any kind of pattern. Nothing comes to mind. There wasn't any change in policy.
Right.
There wasn't anything that really was being done differently. There may have been, I don't know, it would have been prior to my arrival here for part of that fiscal year, since I was only here for the last quarter, but I don't know, what the amount of visits for for permits for the reservations, for example, what was happening prior to last April.
Yeah, 'cause and again, I just ask not to be stuck on that, but just so we can make improvements, right, for this year and say, oh, I know what it was, because I think like our ball fields seem full, our picnic areas seem full, I guess,
We could do that comparative analysis and bring you something.
Okay.
I think it might be related to fiduciary funds, administrative costs being charged back to fiduciary funds. That might be the source of it. So good start.
What is it?
Yeah, yeah.
Actually,
what?
that's an excellent point. So on the fiduciary funds, so a number of our special revenue funds, the sewer down here for, I think it's Lydia Lane, streetlight funds, a number of those are what are called fiduciary funds, where basically we're taking care of it for somebody else, right? I mean, we're doing it on behalf of the residents of that area. What we do normally is we charge them an administrative fee basically for Jennifer's time and the oversight that we provide. And so there was a pretty significant reduction in those fiduciary funds in there as well, which is counted as a charge for service. We're basically charging that special revenue fund for the service that the city provides in administering that fund, preparing the budget, all those kinds of things. And so there was a significant, I appreciate that, Sheldon, that you pointed that out, that there was a significant reduction in those funds. And part of that had to do with how we were taking care of them. We did less care. If you remember, when we came back in November to do the adjustments for the current year budget, for the 26 budget, you'll recall one of the things that we made a point of emphasis about is we went back, and Jennifer and I, we rebalanced all of those other funds, all of the funds, and that had not been happening. And so part of that reduction in those charges was probably related to the kind of lack of maintenance being done on there.
Okay, so this could be like a one-off, just this one year.
It can be, and I think that's where the comparative analysis, and I could even compare then this year's charges to last year's charges as well, and
Okay.
see if we could figure out that pattern.
Super.
And- Yep.
Thank you, Dennis.
Can I,
Go ahead. I just had one other question.
No problem. I just did want to get off that right away. That for me, when I'm looking at it, that kind of makes sense, but I would have questions about the mechanics of that. So I would just ask if you could kind of dig in a little deeper.
I can answer that question
that would
completely
help. Because when I'm looking at the prior year, prior year we were at 258, and current year being 25, we're at 72.
Yeah, we had
It's a pretty
200
significant change that I think, I don't know if it's like an actual change in process or a change in classification. It could be one, the other, or both. I'm not sure. So if you could find out more.
I can answer that question for you, Mary Juan. It's there was an adjustment we made right towards the end of preparing the act for that came from your management team related to the RDA fund, 615. So there are administrative fees that get charged to the RDA fund for services provided.
RDA.
So successor agency, sorry. And so that closed up this last year, and so that was journaled out. And so that's where the reduction in the charges for services is coming from for the most part. So there's a $200,000 adjustment related to administrative costs charged for services, reported as charged for services in the general fund, that went into Fund 615. That's gone now. So that may be that you're going to see that reduction year in and year out now because that successor agency fund is winding down.
Okay. Yeah,
Okay.
that tracks. Thank you.
Thank you. And then the only other question I had under expenditures was on the community and economic development line. What comes under that purview? Community and economic development. We don't really have an economic development department or driver or,
I think traditionally that'd be your planning, both long range as well as
Planning.
planning, building and permitting, those kinds of
okay.
transactions and functions.
Okay, thank you. And we were, even though we had like CSG and before that, whatever, 4-leaf, we were still under? Right, it says,
You're looking at the
oh,
page 83 still?
56,982.
Yeah,
So you were over budget.
we were over budget.
Over budget.
It's all gets folded even the contract.
Excellent. Other questions? Okay. I want to thank you for the work. I know it's a lot, especially
Appreciate it.
throughout over time. I would like to, I think as our city manager noted, we've had a history of both significant deficiency and material weakness over the last several years, but I am glad to see that this year there were none identified in the FY25, which continues the trend from FY24. So that's a significant accomplishment. It sounds really nerdy, but it's pretty cool. So, yeah.
I had a feeling. I could do
It does take, I do know that it takes a concerted, persistent level of diligence within staff to ensure that controls are actually functioning. It's always the one that you miss that turns up in sampling. So the fact that there were none identified is great, and I just want to thank staff. I think it's really good work. So thank you for that. So if there's no other questions, I would take public comment on this item. You can also make public comment if you wish. Okay, seeing none, I will close public comment, and I believe that the action that staff is looking for is an acceptance of the report.
I'd like to ask a question.
You just had questions. Oh, question of staff? Okay, go ahead.
Page 63, this is something that I was not aware of until I read this week. That's the Stranahan Affordable Housing Loan.
3.
In the 90s, when this was approved, I was here. It was very controversial because that took the place of Section 8 housing, for lack of a better word. The city found a way to do silent second mortgages, which libeled the city, the liability. And so finally it was explained that it all be paid back and that it's on the homeowner. If they sell their house, this has to be paid back. Now I read there's one outstanding of $34,000 and we're not going to do anything about it. How did that happen? It says here there's one loan outstanding with interest, and it says after is forgiven after 10 years after the term of the lease. I never read that before, that we're forgiving loans.
Councilmember Ania and through the mayor, we're not forgiving a loan. It's that it hasn't been paid off yet because the property hasn't been transferred, sold, or converted over.
Okay.
That's where it's outstanding in the sense that there's more time left on the mortgage, and so this is what the balance is on that mortgage.
So when the mortgage will not go out then because it hasn't been paid, right?
No, it's not about not being paid. So to be clear, this is just, if you look at your mortgage bill, if you have one,
Yeah.
If you look at that and it says the balance due for your entire mortgage is $100,000,
Yeah, right.
That's an outstanding balance.
Right.
It's not that you haven't been paying. You've been paying,
Right.
But you just have an outstanding balance on that loan because you haven't gotten to year 30 yet, for
Okay.
example. That's the same thing with this. So this $32,000 is what's left on one property from the original purchase, and it's just that the 30-year mortgage is not up yet. Does that make sense?
Oh, it does make sense.
And
Okay.
if
So-
they were to sell that property, then we would be paid.
Immediately.
Okay.
Yeah.
And
From
it
those
would be paid
proceeds.
after the 30-year mortgage if they, okay, thank you. I guess the wording was a little,
That makes sense, but that's not consistent with the language in the report.
I didn't want to say that, but thank you.
So a couple things. One, it's 35 years, not 30. Two, it's 34,000, not 32. And three, it talks about loans in the plural in the latter half and singular in the first half. So I would say, and it does say that interest is forgiven. And it also says that there's an allowance for bad debt for uncollectible amounts. So can we so those things are, I mean, I hear what you said, and that makes sense. But then I read the language, and it's inconsistent. So can you help me can you help me square that?
So I didn't want to necessarily square to the language that's here in the document.
But this is the one that counts.
I know. Well, I'd leave that up to our accountant to square that language
perfect.
with what I said.
We will work with your management team to get that corrected. So
Okay. Do we think that there's an update to the language? That
it
needs to be
sounds
made?
like there may be. So what we'll do is we'll correspond on that and see what the correct language should be. And if indeed it turns out that is the correct language, then we'll respond to your question more directly. If it turns out that it is not, then we'll edit the language and revise that page.
Okay, that's great. Thank you.
Yep.
My understanding was that there was an understanding of forgiveness after a period of time. That's like just built into the nature of the notes that were issued. But go ahead and do the work and then let us know.
So yeah,
I don't actually know for sure. I would just refer back to the documents and then you could let us know.
we'll go back and look at it, and we'll make sure that Siobhan and Associates has that information and can use that to reformulate the paragraph if needed, as
Sure,
needed.
that sounds good.
And then I just had one other question on that same page, and I forgot to ask Chris earlier today. So Diamond Terrace, they're still paying off that loan to us, and did we ever modify the terms of that agreement? No, it's the same. And when does that agreement end, do we know?
It's less than 5 years.
Less than 5,
Less
okay.
than 5. 2030, that sounds right. Yeah, so 2030.
What's that?
2030?
2030, okay, thank you.
$2.3 million loan needs to be paid off.
That's correct. And keep in mind, the last two payments are quite large in that amortization chart, like $1 million or something, a big over $500,000 in each of those last couple of payments.
Wait, can you repeat that?
Last two payments on the amortization schedule for the Diamond Terrace loan.
Okay, sorry, you switched that. I was like, I thought you were still on Shanahan for a second. Sorry.
Moved on to the other
That's
place.
too big. Thank you. Okay. Other questions, comments?
Clarification, and I'm looking at the expenses by function on the handout. These categories for expenses, general government, public safety, so those correspond to each department, correct?
In general, that's the higher level for each department. There might be a more detailed, like, for example, general
What I'm
government.
interested in is the general government, and that just surprised me on the large amount that was there. In fact, actually, it went down.
Went down quite a bit, yeah.
From 24.
Right.
And why? That's interesting to figure out why that happened.
Some of that
but,
has to do with the pensions and PERS adjustments, but a lot of that has to do with just the activity during the year.
Yeah.
Yeah,
Okay. Thank you.
you're welcome.
Okay. Other questions or comments? Going once? All right. We already took public comment, so thank you very much. We are looking for an acceptance of the report. So if there is, I think we need a motion for that, if I'm correct. Is there a motion to accept the report?
I'll make a motion to accept the audited annual comprehensive financial report for the city of Clayton. Do you want to say with those potential changes in
Yes.
that one paragraph as noted?
Yes.
Okay.
I'll second.
Okay. We have a motion and a second. If we could call the roll.
Councilmember Diaz. Councilmember Tillman.
Aye.
Councilmember Tripiano.
Yes.
Vice Mayor Ania. Mayor Juan.
Aye.
The ayes have it, and the motion carries with the vote of 5-0.
Thank you. With that closes item 8. Item 9 is adjournment. It is 7:55.
Good job.
Thank you.